Hello everyone, this is Modified Darvas Box coming at you here on Sunday, December 5th with a quick video why I think a trading bounce is likely this week. So we've just come through two really bad selling weeks, bad depending upon what you may have owned. But I'm of the opinion that based on the charts and trading indicators I see, that a bounce is likely. Don't ask me about timing. I don't know the precise time, but I think maybe this week it'll happen. So, okay, before we get into that, let's just do a little housekeeping. For anybody who doesn't know who I am an individual investor who created a trading system based on the book How I Made $2 Million in the Stock Market by Nicholas Darvas. I recommend you buy this book from Amazon and read it. In my opinion, only three states of trend exist: uptrends, downtrends, and sideways. An example of a sideways pattern is called a box pattern. And basically, I look for box patterns that are bullish, that look something like this on the upper right. And I try and short or mostly avoid the bearish Darvas box patterns. That's what they look like here on the lower right. Basically, what I'm trying to do is transact when the trend changes. But I've been doing this for 23 years, so I've got a number of little tricks and stuff which I do, but this is the thrust of generally what I'm trying to accomplish. So, all right, let's get into the charts here. And basically, we can all agree the last couple of weeks have been either bad or mildly bad or just a terrible ass-kicking wipeout, depending upon what you owned. If you own growth stocks, which have been going up forever, like software, yeah, you got your butt kicked. If you're in the S&P 500 index and you're an indexer, you know, maybe you hardly noticed. You know what? Was there some bad things? I don't really know. Maybe if all you own is Apple, well, maybe you're really happy because Apple went up. But depending upon what you own and your objectives, yeah, it could have been a really bad couple of weeks. But let's take a look here to see what I mean about why I think a trading bounce here is likely in the near term. So on the screen is a chart of the S&P 500 index. You can see, yeah, we had a lot of big red sell volume. Let's put on SPY, which shows a little better. SPY, big red selling volume occurred all week. But what's interesting here is it didn't even break the weekly moving average, which I use. And if you notice here, the weekly moving average has held up fine. Was this a bad week in the S&P 500? Not really. But as people correctly point out, a lot of the components of the S&P 500 might not have done very well. And maybe it was held up by Apple. But either way, that's the net result. One interesting thing here about the level of selling. So I drew this line across the bottom. This week was the biggest selling since the COVID lows in March of 2020. Maybe here in June, but from 2020, as you can see the line. So basically, people panicked and hit the sell button. Whether it was rational or irrational, who knows? But we can all agree that there was a lot of selling. That's what the charts are showing here. Like the QQQ, yeah, big sell bar, but not as big as in prior times, which is interesting. But then again, that's loaded with technology, etc. But with a lot of the selling, some other individual stocks got hammered. But since I'm focused on whether a trading bounce is going to occur, I'm looking at various indicators. One of the first ones is the VIX, the volatility index. So we know here from COVID lows, this is how high it got. I draw this line here about 50 because if we look historically, 50 is a level where if it hits that, you better be thinking about buying. So right here, a 30 level, yeah, that's bad. It's gone up pretty fast. Had what I call a box breakout. But this action here where it sold off in the last hour of Friday makes me think, yeah, maybe people are thinking about a bounce also. There's that closing action on the hourly bar of the VIX. So that might be setting us up for a bounce here this next week. Another indicator I look at is the McClellan oscillator, T2106. The McClellan, as you see from what I've circled, has hit levels which historically have led to bounces as well. You don't use this in a vacuum, like just use it, but use it with a combination of things. But as you can see, there's the COVID lows from 2020, and then here's the various other lows, and yeah, it hit levels that are associated with bounces. Another indicator I look at occasionally is this one, T2107, percent of stocks above the 200-day moving average. I'll put this on a monthly level. Monthly, so you can see here. These past areas I've circled are where real nasty crises hit of some kind. And as you can see here, I drew this line at this level because that seems to be the delineation between a real crisis versus what's happening now. Right? This selling is based on fear. Has the Fed actually done anything yet? No, not really. We're still, we think we know what the Fed's going to do and we're reacting to it, but they really haven't done anything yet. So knock on wood, we'll see how this goes. But to me, this indicates we're at the bottom, well, at the level which delineates something really bad versus, okay, it's not good. Then another indicator is the put-call ratio. Now this one's really interesting. This is a weekly view. And as you can see here, it's generally accepted that above 1 is reflects fear, definite fear. We hit 1.15, which, yeah, is a lot of fear. And if you just look historically back here, it's roughly the most fear since the COVID lows, with one little episode here in 2020 as well. But generally, that's a lot of fear. People were buying puts. We saw the red sell volume in the indexes. They're buying puts. Yeah, basically everybody was selling this past week. Everybody who's reacting was clicking the sell button, looking for protection, etc. The thing about when everybody's selling is when everybody's doing something, the market tends to go the other way. When the ship leans too far to one side, it'll then swing to the other side. And it's kind of like a car crash. If you're in a car crash, eventually you stop hitting cars, right? So let's see what I mean by that. Here's a terrible stock, and growth stocks like software have been a real problem this past week. They just got killed on their earnings. ASAN went from 140 down to 67, which is your basic butt kicking. And yeah, it probably got way too high on market cap. But for whatever reason, this is how the market is changing. But is this going to go from 67 down to 30? Yeah, I kind of doubt that. But that's a good indication of some bad stuff that's going on. DocU, yeah, another case of was probably way too high generally, but that's how the market is changing. So as you can see, these various examples do show some carnage in the past. What we are interested in is the future. And I'll just say one last thing before I wrap this up. My personal portfolio, I am now long 6 stocks. I'm short 2 stocks. And 5 of the 6 longs I've got, I bought on Friday. And I went out green with either a smidge profit or a tiny little loss, but mostly green on all of them. So I put my money where my mouth is. So we'll see if we do indeed get a trading bounce this week. Hope you enjoyed the video, and we'll talk to you soon. Bye-bye.